Hello, everyone, and welcome to this afternoon webinar, Friday afternoon. My name is Theo, and I'm here to introduce you Paul Wallace. It's going to take over. Paul, it's an experienced and professional trader. He's going to explain you very important aspects of trading today. I'm sure you're going to gain a lot of value, and Paul, the microphone is yours.
Thank you, Theo. Thank you for that introduction. Good afternoon, everybody. Great to see so many of you here today. Today we're going to talk about, utilizing a versatile swing trading strategy, something that could be very useful for you, depending on whether you're a completely new trader or whether you're an experienced trader. What I'm going to be doing is sharing with you a versatile swing trading strategy, focusing on executing on the 4-hour chart. For those of you joining us for the first time, great to have you here. All right, you've got the chat box there. You're very welcome to put in your own particular questions. Or if you're watching this later on the Admirals YouTube channel, great to have you here. Be sure to sign up to the Admirals YouTube channel. Give us a thumbs up if you find this useful, or even a thumbs down. We don't mind. It's all feedback. Okay, we all we appreciate everything that you give us in terms of feedback. I appreciate that also. As I've said before, that we have a broad range of experience of people here who join us today for our sessions, from complete beginners to very experienced traders. You're all very welcome. There will be something for everybody here that they can take away and utilize in their own particular trading. And also, I recognize that for the English-speaking webinars, that we have a truly global audience. Okay, so from wherever you are in the world, joining us, myself, okay, and the Admirals team, we hope you're well and safe and making the most of this rather sort of mischievous 2022 that we find ourselves working our way through. So with that, let's switch across to the slide and talk about a versatile swing trading strategy. So let me just bear with me one moment, ladies and gentlemen. I'll just bring this all up here for us. Hopefully this should be able to see that. There we go. Excellent. So, hopefully that you can still hear me, you can still see me, and hopefully you can see the slide. Thank you. So Jay Van Buren, nice. Yep, you're very welcome. You're very welcome here today as well. Great to see everybody here joining us. All right. So, as I said, we're going to talk about a versatile swing trading strategy. Let's bring that in there so you can see me a little better. So what does that mean? Well, stick with us, ladies and gentlemen, all right, because I will be able to explain that to you and hopefully give you a little bit of insight into how you can basically employ a versatile swing trading strategy yourself. Those who don't know, remember, Admirals are a Forex and CFD brokers that have global presence, but with local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets, utilizing both the very popular MT4 and MT5 trading platforms. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help and guide you. And one piece of news that is exceptionally useful for traders is that, here at Admirals, what we're seeing is not only are we seeing our spreads that are actually getting condensed, okay, and getting tighter spreads on many of the trading products, but also the ability to trade those products at smaller lot sizes. Okay, in terms of micro lots, that is now available. That opens up a wide range of trading opportunities for you all here. As I said, if you have any questions, get in touch with your account representative. They'll be very happy to help you. And as I said, we're here on YouTube as well. You'll find both this video and everyone else is in the sort of Trading Spotlight series. You'll find a huge amount of content there on the Admirals YouTube channel there at Admirals Global. So, I commend that you go and check it out and look at the amazing amount of content that has been put up there over the last couple of years. So, ladies and gentlemen, what are we going to talk about today? What's on our agenda for trading? Well, firstly, I'll talk about, what does it actually mean to be a versatile trader? I have my own definition, and it's the way I look at myself as a trader, and it's the way I like to coach traders in terms of, for them to be initially a versatile trader. We'll talk a little bit about how we set up our charts, and also I'm going to share with you a very simple, versatile swing trading strategy. That's what we'll share today, and we'll look at how do you trade them, okay, and I'll show you a few examples. If the time is remaining, what we'll do is we'll switch across to the live markets, and I'll try and show you in what's going on in a live market here today. I appreciate that is always useful for you traders at home being able to see that. So be sure to stick with us till the end until be able to sort of to see and enjoy it. For those who don't know me, my name's Paul. I've traded for many years, all right. I've traded for hedge funds, traded for high net worth clients. Primarily, I look to trade FX indices and commodities. They tend to be my particular favorite trading classes. And I tend to be a sort of trend trader for swing and position trades. And for my shorter term intraday trades, I tend to be a reversal, a mean reversion trader. So let's talk about versatile swing trading. So it would help me, ladies and gentlemen, for those of you here joining us today, how many of you would consider yourself a swing trader? How many of you would say that that is the way you primarily look to operate within markets? It's not a judgment here nor there. It's just interesting to know who is here. Maybe you're completely new to trading, don't even have an idea what swing trading is. That's absolutely fine. That's why these sessions are here, okay, to help educate you and put you in a good spot. No problem at all. But it would be interesting to know, just, put a little comment there in the chat box in terms of, what, if any, experience you have had as a swing trader. Because as the slide says, ladies and gentlemen, lots of people are looking for ways to swing trade markets, but may not necessarily be aware of how to do that. What I'm going to do is I'm going to share a simple swing trading strategy that will allow you to engage with a wide range of markets. I'm going to focus on primarily FX today in terms of how to look at it and operate, but the actual concept will work across all asset classes. And what we'll be doing is we'll be focusing on the 4-hour chart as our main execution time frame. This is part one, okay? I'll do a second part in a few weeks' time, okay? Just taking it on another level, sort of just helping you confirm that. But what I'm going to just do today is just share my views on what a versatile trader is, explain the strategy, and share some simple ideas and some simple examples on how you can possibly use it. So Peter says that, hi Paul, yeah, I use swing trading in my strategies. Paulina says I'm brand new, so wish to learn everything from the beginning. Well, thank you for that. Thank you for your insight. Okay, thank you, Peter. Thank you, Paulina. That's great. Okay, that Paulina, you're brand new. As I said, that's what these sessions are here for, right? Just to help complete beginners, just get a little bit of education and a little bit of insight from an experienced trader into different ways and styles that you can particularly engage with markets. Because as you try them, what you'll find is the particular sessions that work for you, that actually just that are more suitable for your particular trading style, and with a little bit of experience and making sure you're keeping good records. What you start to do is you start to build a picture of your particular trading style. And for many people, swing trading is their style, and sometimes that's driven by the fact that they might be trying to trade around a day job or family and lifestyle commitments, or they may not really even want to spend that much time at the screens. They might only want to sort of have a look at the screens once or twice a day. So swing trading strategy can be very, very helpful, right? And it can be a very useful way for as I said, for let's say part-time traders, people who are trading around day jobs and other commitments, to give them the opportunity to engage. But as I said, today, what we'll do is I'll explain the strategy and share some simple ideas on how to use it, and we'll take it on in part two, okay, which I'll probably do. It might be what we're into, sort of kind of next month or into early September, based upon what we, how we find ourselves working. So, what does it mean to be a versatile trader? All right, what do I mean when I say that, to traders? Okay. Ultimately, my aim for you, ladies and gentlemen, is for you to be a versatile trader. I would define that as you having the ability to trade any instrument on any time frame in any direction, using high reward to risk setups to create positive expectancy. Okay, that is my simple definition of a versatile trader. You can trade any instrument on any time frame in any direction, and you use high reward to risk setups to create positive expectancy. That's where we want you to be. All right, that is where I hope you'll be. And what I will always say is that what you will find is that the more you trade, you will hone, you will tweak, you will refine your own particular process to be able to find the ideal sort of window for your own style of trading. But if you have the skills, you have the underlying baseline skills to be able to trade any instrument on any time frame in any direction, that gives you a great skill set that will help support you throughout your entire trading career. Because what you find is that if you love trading, trading's going to be part of your life for the rest of your days. It's not something you do for a year and get bored on. If you love trading, you have a passion for trading, and certainly we here at Admirals do, it's something that you're going to always basically have part of your life. So being able to have that kind of that foundational skill set to be able to trade any instrument on any time frame in any direction, that is actually a really good skill set to have, and it's one that will help increase your longevity as a trader, and will also provide you with the flexibility to adapt to changing market conditions, because markets change. Okay, they're never the same year in, year out. Okay, they will change, and you being versatile will allow you to have the skills to adapt to whatever particular trading environment we find ourselves in. And as I said, you will basically, you will tweak and refine, okay, and hone your own particular style. And that's great, and that's fine. But as I said, coming from a baseline of skill sets like that, it will just help you become a much, much better trader. So that's when you hear me talk about how I want to develop you all into being versatile traders. That's what I'm looking at. And what we're going to talk about is a swing trading strategy, which is versatile, that allows you to achieve those particular sort of skill sets that I want you to have. So, when you hear that, how does that sound to you? Does that sound sensible? Does that sound achievable? Does that sound like something that you're already working towards? Okay, some people I appreciate may never have really given it proper consideration. Okay, and that's absolutely fine. That's what these sessions are here for, to educate you, to give you insight, to give you a little bit of, a little bit of homework, a little bit of work to just basically stimulate you, to allow you to operate your brains, okay, and develop not only as a trader, but as a human being as well. So let's start to set up our charts, keep it very, very simple for a versatile trader. So for a versatile trader, 4-hour swing trader, okay, which is what we're going to be, I'm just going to use what you'll find is my standard chart setup. You'll find that I have a blue 20, red 50, green 200 simple moving averages on my chart. I also have fractals. What we'll also utilize, okay, what we'll also utilize is we will utilize the slow stochastic indicator, but only on the weekly and 4-hour charts with a setting of 955. All right, that's what we'll do, and I'll show you that in a slide or two. So we're not cluttering up our charts, just one indicator, all right, one oscillator, and then the standard chart setups of the simple moving averages and the fractals. We're not trying to kind of reinvent trading, okay? We're trying to just be kind of a simple way that you can operate and work with that. And the first thing you do is always, and you'll have heard me say this time and time again, is that whenever you open a chart, regardless of what it is, you draw on your support and resistance, patterns and levels from the monthly, the weekly, the daily charts as per normal, all right? That's just your standard routine, your standard behavior, okay? Those are good habits to get in place to actually work with and operate. So Peter says, I find I'm better at some timeframes than others, but I'm trying to improve across all timeframes. Thank you for that, Peter. Thank you for the insight. And that is that's absolutely that's absolutely fine. You will find that there are certain instruments, certain timeframes, certain setups that resonate with you, okay, that you find easier to identify, to spot, to trade, and that's fine. The important thing is you just keep records of this so that you get that data to be able to just to refine your own particular approach to make it in your case it would be the Peter's way, okay, and that's absolutely fine. That is absolutely fine. It's to try and think that all instruments, all timeframes, all setups you'll find easy to understand and see. It would be it's just that's a little bit it's unimaginable, it's unsustainable, right? You will find that there will be timeframes, instruments, setups that specifically speak to you, that resonate, that leap off the chart at you, And that's what you need to be aware of and pick up on and work with. So thank you for that, Peter. So, listen, this is a chart of the Kiwi dollar against the US dollar, monthly, just, the charts are there, as I said, a blue 20 period moving average, a red 50, a green 200, fractals on there, and just drawing on, okay, monthly, just drawing on those levels of support and resistance, okay, that's what we're just looking to do, to build a picture, okay, that's all we're looking to do, nothing, it's nothing rocket science, just simple, good habit, time and time again. So, as I said, firstly, draw and support resistance patterns and levels from the monthly, weekly, daily charts as per normal. And then what we're going to do is we're going to select instruments to focus on that have the following in place. For bullish, for long orders, the weekly momentum is bullish and the 4-hour has price, 20 and 50 period moving in alignment along with the weekly momentum, which we'll explain in a moment. And for shorts, the weekly momentum is bearish and 4-hour price, has priced the 20 and the 50 in alignment with the weekly momentum. You might not necessarily understand that if you're completely new, but don't worry, bear with me. The next couple of slides will explain that. The defining weekly momentum is defined by the weekly stochastic indicator, right? We are not using the stochastic to basically identify overbought and oversold instruments. We're using it as a way to define momentum. Think of it like the underlying current of that market. So here we go. Let's bring up the old drawing tool here. So, when we have a bearish trading environment, what we would have is that we can see that here, let's just, for example, here, right, this is the weekly key, this is the weekly key, okay, is that, price is beneath the 20 period moving average, which is also beneath the 50 period moving average. What we also have done is that stochastic, okay, the stochastic is also trending down as well on the weekly chart, all right? That's it. We want the kind of the weekly chart. Whenever you can see here what I've drawn in is right. Okay, so when the stochastic is turned down, I've just drawn in basically, in this case, a red vertical line there. Okay, or if it, as it's just in that particular case, it's just turned up, it's crossed up. I've just drawn a green one. That the reason is as green is bullish, red is bearish. Okay. You can see there that that's over like a 2-year period. It's over 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 10 times what it crosses. Okay, so over 2 years, it's not something you have to be, Johnny on the spot doing every minute of every day. These things don't work. Just remember, it's just we're thinking of that as that weekly momentum. That's stochastic when it's when it's basically it's moving up. We're using that as an indication of this underlying stronger weekly momentum, and then basically as it's running down, we're thinking of it as like weekly bearish momentum. Think of it as you're like a surfer, okay, and what we want to be doing is we want to be surfing the good waves, all right, and that weekly momentum, those are the kind of waves we're looking to try and catch. So remember what we're saying is that for longs, weekly momentum is bullish, 4 hours price, 20 and 50 in alignment. For shorts, you've got the weekly momentum, the stochastic is bearish, all right, and you've also got the 4-hour price. Okay, chart has 20, 50 in price, all in alignment. Then what we'll do is then on the 4-hour chart, what we'll look to doing is to trading all of the pin bars that are, that are giving us an opportunity to enter in the direction of this trend. Furthermore, what we do is we use a 50% pullback entry, all right, in the actual pin bar, which I'm just going to show and explain in a moment. You could also use engulfing candles and key reversals, but to begin with, right, just very simply, right, we're just looking, 4-hour pin bars in alignment, okay, with, with our particular trading direction, with our trading bias. It's important to keep a note of how many of them get triggered and how many of them do not, because, there will be ones that do. And what I like to use, okay, is I like to use the 261 fib extension target as my target for my particular trade. So I'll explain that more over the next few slides. We'll go into it. What I want to do is just put it on one slide that you can almost like have a checklist that you can follow, because those of you who know me know that I love a checklist. So just as part of it setting up, remember what we just looked at there. We looked at the Kiwi dollar on the weekly chart. And remember what I was saying is that you want to, the weekly chart, when the stochastic turns bearish, I just draw in a vertical line, or when it turns bullish, I draw it on the weekly chart and it comes down to me. Remember what we're saying is, if you've got bearish bias, bearish momentum is where, okay, you've got the weekly momentum is bearish. You also have price beneath the 20, beneath the 50, which it was here, wasn't it? It was for a good period there, right? And we're looking to try and basically trade the pullbacks on that as price basically moves in that direction until that changes. Okay, we can see it changes there. There's a strong pullback there, but then actually what we can see is the 20 price gets beneath the 20, which gets beneath the 50, and we're back into that sort of bearish environment there. Trade it all the way down, and then what do we see is actually the weekly momentum change. It's interesting to see. I'm just going to close. We can see that the kind of that weekly momentum is turned bullish, and what do we get? Prices, the last push puts in a double bottom there before it starts to turn, and then what happens is we get price above the 20 and above the 50. Hopefully you can see that. I'm going to show more examples. I'm going to explain it a bit more, but remember, for when you're basically for bearish bias and bearish momentum, we want to be basically looking for shorts. That's when we've got bearish weekly momentum, price on the 4 hour beneath the 20 and the 50. Every time price pulls back and prints something like a pin bar, that is our opportunity to sort of short into that particular trend. And that's what we're looking to achieve. So remember what I said is that when you're identifying a pin bar, what we're looking for, what you'll see me write as a 50 PBE, okay, which is a 50% pullback entry. It is a very aggressive entry, which I'll explain now. And there is a higher risk of stop out. However, if the trade goes your way, then you get a much better reward to risk. Remember, that's what one of the things I was saying about being a versatile trader was employing a high reward to risk, okay, triggers in order to give ourselves, the best opportunity to achieve positive expectancy. So, what we have here is, in this particular example, you see there's a 20-period moving average, price has been moving up, price pulls back, and it prints, you can see there, it prints a bullish pin bar. This is what we want to be buying. Normally most people will be buying above the break of that pin bar, but we're going aggressive. And what we're doing here, okay, is we're putting in an entry here at 50%, okay, halfway down this bar. Stop loss goes at its normal place, okay, a few pips beneath the low of that candle. So when on the next candle it comes back down, it triggers. So we have our entry and we have our stop. It's a very aggressive entry, okay? And as I said, you can still get stopped out, or it might not even trigger. Price might be in such a strong trend, it might not come back and trigger you. These are the risks you run. But when it works and it works well, it allows you the opportunity to achieve a very good reward to risk. And that's what one of the things that we want to do. And there's a couple of little rules there. Place a buy, in a long, place a buy order at the 50% pullback of the pin bar, or just the spread of it in front. With the stop loss beneath the low of the bar, a few pips beneath the low of the bar. Set your order for the next 3 periods only. So on a 4-hour chart, all right, that means you're effective for the next 3 periods is for the next 12 hours. Okay, you can do that on the platform. You can set your order and have it there, right? So if it doesn't trigger within those 3 periods, it automatically cancels the order. That can be done on the MetaTrader platform. And just have to be aware that sometimes the trade will not go deeper into the pin bar to trigger your order. Such as life, it might be, let's just clear this here. It might be that, when this pin bar closes, price comes back, but it doesn't come back 50% of the way because the trend is so strong, all right? Your entry order does not get triggered. That is part of trading, ladies and gentlemen. That happens to everybody, okay? And there are ways and means that we'll talk about that maybe in part 2 about how you can deal with that, but just recognize that is, that's a distinct possibility. Doesn't mean, you're a bad trader or anything like that. You're following your rules. That's what's the important thing. So, just adding the steps here. So remember, to be a versatile trader on the 4-hour swing trader, what we're looking for is, just draw on your support and resistance, your patterns and your levels from your standard monthly, weekly, daily charts and all, because remember, we don't want to buy directly into resistance. We don't want to sell straight at support. We want to identify good levels that might be of useful to us. We're going to select the instruments, all right, that have the following in place. For longs, all right, you have weekly momentum is bullish, and the 4-hour chart has price above the 20, above the 50, and they're nicely aligned. Or on the other side, for short bias, what we'll see is that the weekly momentum of the stochastic is bearish, and the 4-hour price chart has price 20 or 50 in alignment. Okay, they're coming down in alignment with that weekly momentum. Then on those 4-hour chart, trade all the pin bars, okay, that are in the direction of your bias using the 50% pullback entry. All right, and I appreciate some people might just look at that and start sucking teeth a bit. That might be a bit too rich for me, Paul. I might not be too excited about that. And that's understandable. And I'm not saying you can't just trade a normal pin bar with the break of the high or the low of the candle. You can do, but you just have to recognize that in terms of your reward to risk, that is going to be somewhat different. Okay, it will skew the numbers and the figures. As it says there, keep a note of how many of those triggers and how many do not. I personally like to use the 261 fib extension of that pin bar as my target, all right? But what you can do, okay, as a new trader, is when price hits the 161 fib extension, then you can move your stop to break even. And my general rule is let the trade play out, all right? Let the trade out. You should probably just have an expectation of a 42 to 48% hit rate. And an overall average reward to risk, which will be around about 2.4 to 2.8 to 1. Okay, that will give you positive expectancy. All right, that will give you positive expectancy. Hey presto, you have a profitable trading business. That's what you're looking to do. But as always, make sure that you keep good trading records. All right, but those of you who've joined me over the last couple of years, you'll know that I'm always banging on about having good routines, having good checklists. All right, having nice simple trading tactics, and also making sure that you keep good records so that you are in a position, right, to just review your data, right, to just keep on top of your data, identify where you might sort of refine and tweak the process in order to suit your best trading setups, which you will have. Okay, you will have really good trading setups, you'll have really poor trading setups. They will all be part of it. Okay, and you have the opportunity to refine it and make good choices based upon the data, more so than just on on recency bias, what happened in the last trade, because lots of traders do that. Okay, they will change their rules based upon what the last traded, and that's just recency bias. That's not really good trading, because you really need to be making a decision on a sample size of trades. 20 trades, 50, 100, 200. Of course, the more data you get, then the better your decisions are likely to be. So, as I said, when it comes to targets, I like to use the Fibonacci 261 extension. When we switch across the charts, I'll show you that. Okay, I'll show you how I've got that set up there, because it normally gets me it can provide you about 2.5 to up to sometimes 3.5 if you've got using the 50% pullback entry. But I would set your expectations at really of about 42 to 48% hit rate. But if you have that kind of reward to risk and that kind of hit rate, you have positive expectancy. Okay, and that's what traders are driving towards. For very experienced or aggressive traders, and I know there are some of you out there who join us, you might even want to look at using the 423 fib extension as a target. Okay, when you're in good trends, that is the opportunity for you to sort of surf that strong wave for as long as possible. But generally, I tend to like to sort of just use the 261 for myself. I just like to basically, I like to sort of kind of sandbox my trades on, trade off. If I'm called away to do other stuff, okay, it means that the trade is on. I know where my target is, I know where my stop loss is, and I can just almost like fire and forget my trades. Okay, and that's what particularly suits me. But I do also recognize that some people will have a higher risk appetite than myself, and using the 423 fib extension is what which is what may well make them happier. So if you remember, we looked at this a little bit earlier. We had like kind of the Kiwi dollar monthly chart drawing in levels of support resistance. Go down to the weekly chart. And then the weekly chart, we're able to identify, okay, using stochastic, right, okay, where is the weekly momentum, where's the weekly kind of, what's the trend, where's the current. Remember what I was saying is that, we've got bearish bias when we've got, bearish weekly momentum and prices beneath the 20 and the 50, okay, and you can see in there, it was actually a pretty clear downtrend, wasn't it? Pulls back here, okay, did pull back there as we looked at earlier, but then it just effectively reasserted itself. The dominant trend to the short side basically reasserted itself. that's where it worked until what we saw was the momentum, the weekly momentum turned bullish there, okay, and then basically we had a non-surprisingly a double bottom and price started to trend its way up there. All right, so that's what we're looking at. But when we want to start to look at it a little bit closer, well, we can look at, well, what were the opportunities here, okay? Remember what we said as part of the rules, we kind of just tell you, just trade every pin bar, okay? Don't try and cherry pick the best ones to begin with, just trade every single one, all right? Trade every single one, okay? So, in this particular case, what we had in there in that particular period was that actually we can see here, the first pin bar, actually it fails, all right? And actually the second one, it fails, all right? And when you see that those first two trades fail, you're probably thinking, what was Paul telling me? This is, dear me, this is making me grumpy. But, then what happens is, then we get, the third trade wins, fourth trade wins, fifth trade fails, sixth trade wins, seventh trade wins, eighth trade wins, ninth trade wins, 10th trade loses, 11th trade wins, 12th trade wins, 13th trade wins, 14th trade fails, okay, 15th trade wins, 16th trade wins, okay? So you had 1, 2, 3, 4, 5. So of 16 trades, okay, you had 11 winners and 5 losers, okay? All right, and 11 winners that were able to hit their 2.3, 2.5 reward to risk on their setups. Okay, so as I said, the first 2 trades lose, and you might just be thinking, oh my word, what am I doing here? Right, but it's not about the outcome of one trade. It's about basically looking to try and surf a really good trend. That's what we're looking to do. Okay, that's what we're looking to try and do and achieve. And that's not always easy for trades, especially if you've had 1 or 2 losing trades, putting on that third trade might seem a little bit nervous. You might seem, crikey, what am I doing? I don't want to lose again. But each trade is a unique moment in time. Okay, that trade that sets up has nothing to do with the trade that's gone before, and it'll have nothing to do with all the trades you have in the future. It is just a unique moment in time. Okay, and your job as a trader is to put the trade on. If it meets your rules, okay, if it meets your rules, your regulations, if it's in your checklist, your job is to put the trade on. It is the market who decides when and if you'll get paid. Nobody else does, all right? It's the market's job, all right? Your job as a trader is just to basically put the trade on, manage the risk. And that's what we're, that's what we're particularly looking at there. So, just carrying on how that kind of Kiwi dollar did is, what we saw is, we were in the kind of that downtrend short until price gets above the 50, doesn't it? Then the 20 crosses above the 50, okay? And as we said, price has just kind of come its way up until what we can see is it basically bounces off the 200. Suddenly price is back beneath the 50 and now the 20, okay? Now we've got prices aligned, okay? Price is beneath the 20, beneath the 50. We know we're still in a weekly bearish momentum, okay? That hasn't changed. And what happens is price continues down and we basically, that trade wins, okay? That trade wins, that trade wins, that trade fails, okay? So you have, 4 trades there, 3 winners and a loser, all right? And price starts to pull back now. Price is looking a little bit as if it's going to cross. And then what actually happens is, well, the weekly momentum change, the weekly stochastic has swung, it shifted, and now it's gone bullish, okay? So we're no longer looking for bearish trades, okay? Now we're actually just sat in hand, even though prices continue to go down, all right, okay? What's happened is the momentum is shifting, okay? And we don't want to do that. We don't want to try and surf that. We just need to sit on our hands and see where it basically takes us. And what actually happens is if the weekly momentum turns bullish, then what happens here, price puts in a big key reversal there, which then actually becomes, a bit of a double bottom there before price pushes all the way up here, doesn't it? Pushes up above. Now, price is above the 20, which is above the 50 with bullish momentum. What happens is, we get a little bit of a long setup trade there, okay? Price pushes up, hits its target, price comes back down, puts up another one, puts another one here as well, okay? So, you have, now once we've switched the bullish side, okay, now you've got 3 trades there, right, that's set up for you. So, there will always be, let me just draw this. There's always going to be a period here, boom, let me just clear. There's always going to be a period, okay, all right, where, effectively the momentum swings, it shifts, And it's not unsurprising if, your last trade might be a losing trade, because it's a sign that basically the momentum is shifting. And once the momentum is shifting, well, then, then it takes a little bit of time for price to basically to demonstrate, okay, it's moved, it's now back getting into, in this case, it's getting into a bullish alignment, okay? The weekly momentum is bullish. Price is now getting above the 20, which is now above the 50. There's an alignment there. We want to be trading the bullish trades there, okay? That's what we're looking to do. I've just thrown in a couple more examples here, okay? We can see here, what we can see here is that, the weekly momentum is bullish, but we're on the Euro Aussie 4-hour chart. And what we can see is that basically, as price comes back, it gives us bullish signs here, okay? Bullish triggers that kind of trade its own way. It does pull back here a little bit, but it's still, a strong trade, but actually this one fails for us, okay? But, what we're looking for is when we're getting nice trends like that, that's what we're actually looking to do, all right? We're just looking to basically to try and trade with that kind of, as a swing trader, trade the kind of the longer term momentum. That's what we're looking to do. And this was like euro against Kiwi dollar. Let's have a look here. We can see that basically what's happened here, okay, the weekly momentum has turned bullish. And then what we start to see here is, here is where the 20 crosses above the 50, price is already above there, it's a pin bar, okay, basically price trades, okay. Remember what we're saying, once it's happening, just start trading every kind of pin bar that comes with you, okay. You take them all, okay. You can utilize engulfing candles and key reversals, but generally focus on pin bars, all right. And what we can see here is, these are setups, okay. A couple of them fail, a couple of them work, but you can already start to see the price is actually sort of just starting to kind of tighten up anyway. It might be getting towards the end of that trend, but you don't really know. The idea is take the trade, all right. Take the trade, okay. If it meets your rules, take the trade. This is a good disciplining, exercise as well for traders, all right. Just there's quite simple rules. You find out where is the weekly momentum. Does the 4-hour price chart, reflect that? Does it kind of support that? If it does, take the trade, ladies and gentlemen. Get on it, get at it, trade away. That's what you're looking to do. Pound against Canadian dollar, okay. It turned weekly. The weekly momentum is bullish. I'm not sure why the weekly isn't on here, but you can see price. The 20 crosses the 50, the price is already above it, and effectively every time it comes back, okay, and puts pin bars in, all right, you're duty bound as a trader to basically take them. That's what your job is, all right. If it's meeting those rules, take the trade, all right. And and they won't all work out. There will be losing trades. That's fine. That's part of it. Okay, you've followed your rules. That is the key thing. That's the thing we're really focusing on. Yeah, and just more examples in terms of pound against US dollar, and actually sort of looking at how once it had moved, okay, once we'd had a big move, price pulled back, and actually once again, all right, the first couple of pin bars, they're okay, supporting you in terms of bullish, they failed for you, okay, they failed for you, and then basically then you start to get 1, 2, 3, 4, 5 trades that actually work for you, okay. So as I said, it's not about the outcome of one trade. Very often when you're a new trader, you inject all your emotion and energy into that one particular trade setup, all right? But it's just one trade. It's just one moment, unique moment in time. It's just one of thousands of trades that you're going to take in your own trading career. So don't worry about it too much, okay? If it didn't work out straight off the bat, it's your job to put the trade on. It's the market's job to decide when and if you'll get paid for your behaviors. Okay, that's what we look to focus on there. And yeah, these are just more examples of kind of CAD v yen. Okay, here 4-hour. So we know that I'll know that from what's going on is that we've got bearish momentum of the weekly. You can see here, okay, that the price is beneath the 20, which is beneath the 50. It actually pulls back, brings in a bearish pin bar, and wash off it goes. And as I said, I've put this on here. Normally I would go for the 261 target here. So we're looking going from what's that? 81.85 with a stop at 82 down at 81.40. Okay, but as I said, the very aggressive traders, might look to go for the 423 target. Okay, the 423 fib extension, which in this case it worked But as I said, normally I'm just very happy to put 261. All right, okay, it gives me about 2.5. All right, 2.5 reward to risk. Okay, when I'm using the 50% pullback entry, that's I'm very happy just to basically to do that, to work with that, and and let that run its way. Euro, again, this is all about the same time. Okay, we can see that the momentum's turned bearish, but also the price is already under the 20, which is underneath the 50. But as it pulls back a little bit, puts in a rejection candle, and bosh, away it goes. Okay, I've just put in a couple of examples of 423 targets. All right, being able to hit. As I said, I normally go for 261, but some of you I appreciate are probably more aggressive than me, and will happily just work and trade and play that way. Yeah, and that's why you can see there. Okay, that's just more example of just showing where the 261, where the 423 target was. Okay, after you've sort of taken the entry, that's just the way it runs. When it runs nicely, because remember, we're looking to try and surf the good waves. So, ladies and gentlemen, all right, okay, as always, those who who know me will know I'll always give you a little bit of a always give you a little bit of homework to take away. So your task from today's session, go ahead, go and look through your favorite trading instruments, the ones that you mostly focus on. Try and identify, where are the possible setups in the present markets that combine the weekly momentum with the 4-hour price and moving averages. How many setups were created, and how far did those markets move? Did they move to the 261 target, or did they actually even move to the 423 target, which they may have done, which might be, a little bit of a trading opportunity for you. So in conclusion, ladies and gentlemen, being a versatile trader means being able to trade any instrument in any direction on any time frame, and that's where I want you to be as traders, as as your kind of baseline. Today, what we did was we focused on a versatile swing trading strategy, combining the weekly momentum with the 4-hour trend and price action triggers. That is the basis of a simple and versatile trading plan. All right, we've only got a couple of minutes left, but what we'll do is we'll take a quick look, all right, at the live markets, just see if there's one up there. Okay, we've only got a minute or two left. But, as always, if you've got questions, all right, about what we've covered here today, or if you've got suggestions for sessions you'd like to see us do in the future, you can contact us there. You can see email global@admiralmarkets.com, and you can see all the other social media platforms, YouTube, Facebook, Telegram, Instagram, Twitter. Okay, we are everywhere, ladies and gentlemen, so be sure to get involved. So if you just bear with us a moment, what we'll do is I'll just switch across, okay, to the charts, all right, see if there's something up there, as I said, for the last moment or two. So just bear with us and we'll do that. Okay, so what have we got here? This is euro dollar here. Just a minute. We've had lots going on there in euro dollar. So let's have a look at the weekly chart quickly. Let's just zoom in recently. Now, quite clearly we've had a pretty good trend there, haven't we, in the euro against the dollar. We can also see the weekly momentum. Okay, we crossed down here. We had bearish momentum. We had a little period, a couple of weeks of bullish momentum, but it's also turned bearish again. Okay, so if we go to looking at the charts, right, and let's just zoom in here. Boom. Let's just go back a little bit. Okay, we'll go back. Here we go to where we can bang. So what we had here is, as always, you can see that basically, we had the momentum turned bearish. Price was already beneath the 20 and 50, and bang, we'll pull back, trade on. All right, okay, and we can see that how far those trades ran. They pulled back, okay, but basically another rejection candle, another rejection candle, another rejection candle here before price moves down. Before actually what happens then, look at the 20 now crosses above the 50 and price moves back. So we just sit on our hands. That's all we're doing. Just sitting on our hands there, okay, just waiting, letting the market do what it wants to do. Okay, letting it do what it wants to do until what we see is, here we go, until we see that basically price, okay, gets back beneath the 20 crosses beneath the 50. And then once again, we get orders here, we get trades, okay, just showing up time and time again, okay. Remember, we want to try and surf good trends, okay. We want to try and surf the good trends until what we see here is, okay, we see, having had a really good strong move down there, okay, double bottoms there, doesn't it? And then price starts to move up and it gets above the 50 and the 20 crosses the 50. at the same time as the weekly. Okay, the weekly momentum turns bullish. And now we've got other, we've got long trades here, long trades there. Okay, just for a couple of weeks. Remember to swing trading until we start to go sideways, and then we see that basically the 20 crosses beneath, the 50 beneath. So you're doing nothing here. You're sitting here, okay, sitting sideways, doing nothing at all there. And that's sometimes what you've got to do as a swing trader, right? That's what you've got to do. And actually, what we see now here is that the momentum is now, the weekly momentum has turned bearish again. We're already beneath the kind of the 50 and the 20, and price, you can see, is already kind of running down there, isn't it? In a nice trend. Okay, so yeah, so that's just one look at what one chart that's been going on, working it, and as I said, you're just looking to try and serve those particular the particular biggest waves. That's what we're looking to do. So there you go, ladies. Unfortunately, as always, we've run out of time. I appreciate I can always talk all afternoon about these trading tactics. All right, I want to always try and share as much with you as I can in the limited time we have. All right, but hopefully got a few good examples there of how it can set up. So what I suggest is this video will go on to the YouTube channel, okay, in the next day, 24 hours or so. But watch it again, just take notes, just get it clear in your mind, and then just start to go and look, okay, see how you could become a versatile trader, see how you could actually just focus on just being a 4-hour versatile swing trader on FX markets. And you can see there, when you get good trends, what we're looking to do is just try and trade as much of that as we possibly can. So as always, it just is left for me to just say that thank you for joining us. I wish you the very best of success in your own trading endeavors, ladies and gentlemen. I look forward to speaking to you soon. Trade well, everybody. Cheers.